Hello and welcome back, guys. So in this particular session, what we'll be covering about is exam kit of strategic business reporting. Okay, so Moyes, December 2018. Okay, so what we are given is that let's look at the question. So we are given a consolidated financial statement of Moyes Group, and then after that what we are given is that revenue is 612, cost of sales is 347, and then gross profit is 265, operating expenses is 123, and then share of profit of associate is 67. Okay, so our PBT is profit before tax is 209. Okay, so after that what we are also given is that we are given changes in working capital. It's down over here, so this is for previous year, this is for this year, and then after that we are also given pension scheme. Okay, so let's read the question. The following information is also relevant to the year ended 30th September 20 except. So Moyes operates a defined benefit scheme. The service component of 24 million has been included within operating expenses. Okay, the remeasurement component for the year was a gain of 3 million. Okay, the benefits paid out of the scheme were 31 million. Contribution into the scheme by Moyes were 15 million. Okay, so what we need to worry about is that what went into the SOPL, and then after that, so and basically what we did was we reduced this 24 million from SOPL because we added it, we reduced it, right? So we need to add it back. Okay, so that's not actually accrued expenses, whereas a 15 million worth of contribution has been gone. That means 15 million only cash has gone outside of the business. Okay, so let's read further. So see how long the questions are. So goodwill. So goodwill was reviewed for impairments at reporting date. Impairments arose of 10 million in the current year. So current year impairment is 10 million, right? In case of goodwill. So property, plant and equipment at 30th September 20x8 included cash addition of 134 million. Depreciation charge during the year was 99 million and an impairment loss of 43 million was recognized. So PPE at 30th September 20x8 included cash addition of 134 million. So there was an extra purchase, and then depreciation charged during the year was 99 million. So impairment loss reduces our PPE's carrying amount, and then prior to impairment the group had a balance on the revaluation surplus of 50 million, of which 20 million related to PPE impaired in the current year. Okay, so there is that as well. So what has happened is that there is a impairment, right? So how much has there been an impairment? Let's see. So impairment loss of 43 million has already been recognized. Out of this, only 20 million related to PPE in the current year, right? So rest is, so 43 minus 20, right? 23 million is impairment of PPE. Okay, we'll have a detailed look at it. And then after that, in case of inventory, So goods were purchased for dinar 80 million cash when the exchange rate was $1 is dinar 5. Moyes had not managed to sell the goods at 30th September 20x8. So the net realizable value was estimated to be dinar 60 million. So cost is greater than NRV. So lower of cost and NRV, right? So we need to, so the exchange rate is this state, and then the inventory has been correctly valued at 30th September with any expenses correctly included within cost of sales. So it has been correctly valued. That's what it says. Changes to group structure, right? And then after that, what has happened to our group structure? So during the year ended 30th September 20x8, Moyes acquired 60% subsidiary Devonport and also sold all of its equity interest in Barham for cash. So it acquired 60% subsidiary, which is Devonport, and also sold all of its equity interest in Barham for cash. The consideration for Devonport consisted of share-for-share exchange together with some cash payables in 2 years, so deferred consideration is also there. 80% of the equity shares of Barham had been acquired several years ago, so it's again talking about the disposed entity. And then after that, but Moyes had decided to sell as the performance of Bahram had been poor for a number of years. Consequently, Bahram had a substantial overdraft at the disposal date. Bahram was unable to pay any dividends during the financial year. So Bahram had a substantial overdraft, right? So in case of disposal or anything else, what we need to mostly think about is there is a net cash component when you're disposing out of. What you normally do is that you normally tend to reduce the amount that you receive by the cash that you've lost control over. Okay, so see, because when you have a equity interest in Barham, right, there might be some cash in it, so which you've lost control over it. So that means, like, if you're receiving 500,000 for that sale, and then you had a cash balance of 50,000, so you lost 50,000 as well, right? So the net cash received is only 450,000. Okay, so that's the most important thing in cash flow when you're looking at disposal. And then discontinued operation. So the directors of Moyes wish advice as to whether the disposal of Bahram should be treated as a discontinued operation and separately disclosed within consolidated statements of SOPL. There are several other subsidiaries which all produce similar products to Bahram and operate in similar geographical area. Additionally, Moyes holds a 52% interest in Watson. Watson has previously issued share options to other entities which are exercisable in the year ending 30th September 20x9. It is highly likely that these options would be exercised, which would reduce Moyes' interest to 35%. So 52, 35, that means the control has been lost. So what was the control? Control's definition was we had a power over the investee, and then after that he has right or is exposed to variable returns from the investee, and then has the or is likely to affect those variable returns. Okay, so that's the definition of control. And then after that there is some criteria as well, like whether the what's the shareholding percentage, and then after that what are the dispersed number of shareholders there are. So we will talk about that as well. So what we are required is that first, A1, so draft a explanatory note to the directors of Moyes which should include a calculation of cash generated from operations using indirect method and an explanation of the specific adjustment required to the group profit before tax to calculate the cash generated from operations. Any workings can either be shown in the main body of the explanation note or in appendix to the explanatory note. Okay, so what we will do is that let's do number one first of all. So let's prepare cash generated from operations using indirect method. So A, what are we giving the directors? We are giving them advice, right? Explanatory note. Directors of Moyes. And then what are we required in the beginning is that cash flow from operating activities or from operation, not operating activities, okay, from operations. This is like when you've been asked till activities, then you need to include the interest and tax as well, whereas in case of operations you normally don't include those information. Okay, so what's our cash flow, I mean profit before tax? Profit before tax is, so what's our profit before tax? 209 09, right? So all these figures are in million. Okay, so after that, first thing first, always share of profit or whatever that has been added to it. Okay, so let's go from here, share of profit. So share of, is it still in bold? Share of, shares profit. So this is not cash received, right? So we need to eliminate it. So this is, how much is this figure? Is 67, right? 67 minus 67. Okay, and then after that, what else? So in operating expenses, what is included is that this thing is also included in it. So service component cost has been, we normally tend to reduce it from SOPL, right? So it's already been reduced from here, so we need to add it back, 24 million. So service cost 24 million, right? 24 million is added back. Okay, and then contribution into scheme is the amount that we've. So how much did we give them? So that's the net cash outflow, okay? So 15 million. Million is the net cash outflow from the company. So what else do we have next? So impairment, goodwill, okay. So goodwill is also not a cash flow, so we need to add it back. Impairment of goodwill. Impairment of goodwill, 10 million, right? Yeah. And then after that, what has happened next is, I think PPE, it's about PPE. No, yeah, it's about PPE, but first of all, what we need to do is that let's add back depreciation. Depreciation, let's get it out of the way. Depreciation 99. And then after that, what else do we have? So what has happened over here is that PPE includes cash addition of 134 million, okay? So that's gone from down, okay? It's not from up. So it's gone from investing activities. And then depreciation charged has already been added into COS. So it was reduced from uh, our SOPL, right? So we added it back. So an impairment loss of 43 million was recognized. Okay, so impairment loss was 43 million had been recognized. And then after that, prior to impairment, the group had a balance on the revaluation surplus of 50 million, of which 20 million related to PPE. So that means what we normally have to do is that we need to exhaust this 20 million, then only the rest 23 million will be charged to SOPL, right? Because when we have a revaluation surplus, what we normally tend to do is that first of all, suppose if there was a revaluation upward and then you had a gain of 20 million and then later on there was an impairment loss of 43. So what you would do is that, so you would debit it by 20 million and then debit it by further 23 million, okay? So after that, in this figure will be reduced from OCI and then the rest of the figure should be charged to SOPL, right? So that means that the figure has been reduced, right? Whereas this is not a flow of cash, so we need to add it back, okay? So impairment of PPE is 23, okay? Impairment. After that, what else do we have? Inventory. What has happened with inventory? We need to look at that as well. So goods were purchased for dinar 80 million cash when the exchange rate was $1 is equals to 5, right? So what we will do is that simply just to make it easy for us, we will use seats. Should have used it earlier for the other thing as well. So this whole thing would have been better. Well, that's loading. So inventory, dinar, exchange, in dollar. Is it in dollar? Yep, it's in dollar. So 80 million. So our figure over here is also in million, right? So really doesn't matter. So 5. This divide by 5, right? And then after that, the closing rate was how much? So later on, what happened was that had not managed to sell the goods at this date, and then the value was estimated to be 60 million. Okay, and then the exchange rate at this date was 6. So 60 and 6. So that's our valuation at the year end. Okay, so this is this figure divided by this figure 10, right? So the differential is 16 minus 10, right? Or what we could do is that is equals to minus 6, because this plus this should equal this, right? So it's a loss of 6. So what we will lose that, so that's a loss of 6, even though it's a loss of 6. So that's already been included. Isn't that what it says in the question though? Yeah, it's any expense correctly included within cost of sales. So that's already been incorporated. So that means, so this is not a cash outflow, right? The inventory, for the inventory, the cash has not gone out yet. So what we will need to do is that means we subtracted it already from SOPL. Now we need to add it back. So loss on, so translation or inventory. Okay, so that's 6. Okay, and then after that inventory is also done, and then group structure. So what we need to worry about is, do we need to worry about anything in this? I don't think so. So changes in working capital. So what has happened to our receivables? So this is previous year. So it has increased, right? Receivable has increased. That means minus. So INCREAC, increase in receivables. This is going to be, how much is it going to be? So 56 minus 149 means 7, right? So it's minus 7. And what about our liabilities? Has it gone up or down? Yes, it's gone up. So it's 215 and then 197. So that means 18. So 18 increase in. 18, so that will be in positive. So what has happened to our inventory? So 126. So inventory has gone down, right? By how much has it gone down by? So it has gone down by that figure, but we have already made an adjustment to inventory, right? Let's look at it one more time. Okay, let's look at it. So inventory, where did this thing go? So this means decrease in assets, right? So that means the cash has inflowed into the company. So what we need to do is that 126 and 165, right? So in this case, so 126, 126 minus 165, and then plus 6 as well, okay? Because see how we had a loss over here, so that means that figure has already been accounted for, okay? So it's already been reduced in this 126 because this is our closing figure, right? So it's already been reduced from that figure. So we need to add it back, okay? So that's why we are adding it back. So 126, 165 plus 6. So how much will that be? Is equals to, so minus 33, which means 33, right? Because we are subtracting this from this, okay? Sounds good. And then after that, anything else that we are missing? So I think we are only required to prepare cash from operations only, right? So we should be good. Cash from operations. So what is it? Our final figure. So I'll just add it in my own calculator. So 209 minus 67 plus 24 minus 15 plus 10 plus 99 plus 23 plus 6 plus 33 minus 7 plus 18 will give us 333, okay? So this is our figure. Final figure, okay? And then let's do the next question. What is it about? The next question. So it's not B, we are still in A. So number 2, explanation of the specific adjustment required to the group profit before tax to calculate the cash generated from operations. So we are just explaining the calculations. Okay, should not be a big deal. So 2, and then this will be Just a minute, right? So control B, and then after that, what do we need to basically explain about is that so basically what we can say is that with two methods and they are direct and indirect method, right? And then after that in both the methods cash generated from principal operation is recorded in operating activities. Okay, and then after that this would include cash receipts from customer cash paid to suppliers and cash payments made to employee. The indirect method adjusts profit or loss or the effect of transactions of non-cash nature and any deferrals or accruals from past. Okay, so and we can say something else as well. And any items associated with or any items of income or expense associated with investing or financing activities. So that's the cash flow and then associate. So let's explain that associates profit. So when we are explaining this thing, can we say is that in case of associate is that the share of profit of associate is related with investing activities, so it is deducted. Okay, it after that, let's explain to them non-cash flows. Okay, so what are the non-cash flows? So let's explain it. They are those items which is deducted from profit or what we can say is that those items which has reduced profit, deducted reduced profit. So items such as what did we add back? So contribute service cost. Let's say first of all that service cost, and then after that, what else did we? So we can surely say depreciation, and then we can surely say impairment loss as well. And then after that, we can also say anything else. So impairment loss and then loss on inventory, that is our loss on exchange loss. And exchange, not exchange, translation loss. Translation loss. Alright, so those are the items that has reduced the profit. So what about PPE? We need to explain that. So in case of PPE, the revaluation surplus of 20 million is still there, so it is exhausted by full, and further 23 million. I'll just write M, okay? So 23 million is added back. Let's correct my mistakes. Generated transactions. Grammatical mistakes. Employees, customers, activities, accruals, activities, is added back. So what else do we need to explain about? In case of pension, let's explain that as well. Pension. So in case of pension, as per IAS 19, employee benefits, revaluation, surplus is taken to OCI, service component is charged to SOPL, and service charge is taken to SOPL. So what has happened with this spelling again? Evaluation. As the benefits paid is being paid by a third party, is being paid from a plan assets which is not a cash discharge from the entity. Cash discharge from the entity entity, but contribution into it is. So it can be ignored. Alright, because that's where they get their cash from, right? Then after that, in case of working capital, we need to explain that as well. Let's explain it. Bold it. Movement on receivables, payables, and inventory are adjusted to reflect timing difference between cash paid or received and when it is cured. Okay. In this particular case, the net realizable value has reduced by 6 million. 6 million. So, as per IAS 2 inventory, we are required to measure it at lower of cost or NRV net realizable value. Since this 6 million is not a cash outflow, so it is added back So it is added back and is also adjusted with year-end values. Okay, so that's our two number done. And B number, what are we required to prepare? Explain how the changes to group structure and dividends would impact upon the SO S, I mean statements of cash flow, right? So at 30th September 20x8, for the Moyes group, you should not attempt to alter your answer to part A. Okay, group structure and dividend. So what would be the impact? So how changes to group structure and dividend would impact? Changes in structure is one thing, and then after that dividends impact, right? So changes in structure. Okay. So what would happen if the structure is changed? So normally what we normally do is that mm, changes in structure. Then a parent company acquires or disposes any entity, it is treated as cash outflow from investing activity. I don't know if this point is really a strong point or not, but I don't think so. I think it's any relevant. So let's look at what's our scenario. So what do we need to talk about? So Devonport and Baram. So let's divide it up equally. First of all, Devonport, and then after that is Barham, right? So what would happen in this? So let's look at Devonport only. So when Devonport, which is 60% acquired, right, and sold all of its equity interest to Baram, we'll look at later on. The consideration for Devonport consists of a share for share exchange with some cash payables in 2 years. 80% of the equity shares of Param has been acquired several years ago. Movies that does not really make sense. Mm, that does not really affect anything. And then consequently, Param had substantial overdraft at disposal date. That's not really important, but this thing is important. Devonport did pay an interim dividend on 30th September 20x8, right? when it is acquired. In case of Devonport, when it is acquired, how much cash did we pay? Did we pay any cash? The consideration for Devonport consisted of share for share exchange and with some cash payables in 2 years, right? In case of Devonport, when it was acquired, not when it is, when it was acquired. Past. So when it was acquired, only shares were issued, so it did not affect flow. However, the deferred consideration consi- consideration would be treated as an outflow as an outflow after 2 years or would be treated as outflow when it is paid, right? And then after that, do we need to talk about anything else? So what we need to include as well is that other thing that would impact is that when control is gained, all assets and liabilities is consolidated, which would presumably include some cash and equivalent. Cash or cash equivalent at the date of acquisition. On this date, it would be presented as cash in flow, right? LOW flow. And that's pretty much it, I guess. Nothing else. So in case of Barham, so what did we do? We disposed of, right? And then what happened? So basically when we dispose it, we derecognize as well. Do we need to talk about that? So active one port, and then after that sold off is in for cash. Okay. So 80% of the equity shares of Paramount acquired several years ago. A number of years due to poor. Consequently, Paramount made a substantial cash overdraft. So this means that it did not have an actual cash but an overdraft, which means that our net value will be, our net cash received will be increased by the overdraft that we've lost. So that's a good thing. At the date of disposal, we need to talk about anything else. Let's look at it. Let's plan the answer nice and properly. So at the date of disposal, all assets and liabilities is removed from consolidated financial statement, and then after that, so what do we do? And then in case of thingy, in case of cash flow, and this would be presented as a cash inflow in investing activities. However, in case of Barham, has been overdrawn, which will give positive cash flow effect to the group. Okay, so anything else? That's pretty much it. So in case of dividend, what would happen? So it's a subsidiary which is paying it, right? Isn't it? That's what it says. So it's Devonport. So it's not included. So it's not shown, right? So dividend paid by Devonport is not included, okay, because included in consolidated statement of cash flows because it's a subsidiary of Moyes. Moyes, right? It's a subsidiary of Moyes, and so, so it's a subsidiary of Moyes. Consolidated. So consolidated statements are so subsidiary of Moyes because it's a subsidiary of Moyes. So it forms a part of single entity, thus showing the dividend distorts the statement, distorts the figures. Okay, so that's what I basically said, and then after that, what would this have an effect on our cash flow? That means, so it's a Devonport, and then what is it? So it's a subsidiary, right? So how much is the non-controlling interest? Let's look at that as well. 60%. So, however, among the dividend paid, 40% of it belongs to non-controlling interest, which is shown as cash outflow from financing activities, right? Dividend always. Financing activities. Okay. Well, that's it for dividend, guys, I think. So, in this particular case, that's pretty much it, I guess. If you remember, something will add up. Okay, so let's look at the next question. So, C. So I think this is getting a bit long. So C and D I'll finish up in next part so that it's easier, and then so that I just don't want to make it boring and everything. So let's do something that we will definitely have another part of this same particular question, so that the session is very long now, so I just don't want to bore you guys. So if you've got any other questions, please do comment down below. I'll definitely answer it for you. Until next time, bye bye.